Good morning, and thank you for being here today. I really wish that we were there in person. Icebreakers just aren't the same when you're not talking to a live audience. But on the convenient side, at least some of you may still be in your pajamas. So today we're going to talk about providing financial services and payment services to hemp and cannabis related businesses. My name is Andre Herrera. I am the Chief Compliance Officer at Hyper. I've been in financial services over 28 years. I was Chief Information Officer of a bank for 18 years. I've managed significant issuing portfolios and acquiring portfolios, stored value, debit cards, credit cards. I've processed literally billions of dollars of transactions. I'm experienced in high-risk industries as well as cannabis banking. I have assisted about 30 institutions in standing up their cannabis banking portfolios and programs. Just a bit about Hyper. So Hyper began in 2014, and we've been providing payment and compliant cannabis banking solutions, to that industry. We have all different types of solutions for payments in the cannabis space. So just to talk about this session, we're going to talk about the history and the current state of cannabis and hemp banking. We're going to talk about federal legalization, versus the SAFE Act. We're also going to discuss what is illegal, what is prohibited, and then what is permissible. And then we're going to talk about best practices in how to select a payment solution. So let's start out on the banking side. And when you talk to bankers, they pretty much realize that cannabis money is in their institution. So even in the states that do not have legalized cannabis, those institutions will still have marijuana proceeds flowing through their institutions. You have things like investors, employee accounts, landlords, mutual funds, and so even companies like Scott's Miracle-Gro, has a division that is in the cannabis space. So a banker is given two choices. So they can either decide to bank the space, or they can de-risk that customer, that account out of their institution. So let's start looking at the guidance around cannabis banking. And it all starts out with the Cole Memorandum. There were two Cole Memorandums. One was in 2013, and then there was a follow-up in 2014. And basically it set forth the enforcement of the Controlled Substances Act. And they set out 8 priority factors. And they said, all right, if you're following these 8 priority factors, you're not going to be a priority to us. We're not going to come after you and target you. And so there was another Cole Memorandum update in 2014. It reiterated those same enforcement priorities, but they started talking about the banking. And then it was important that the banks must ensure that their marijuana customers are in compliance. And so the basic message from the Cole Memorandum was that federal law should not be a barrier to banking marijuana-related businesses. Well, come 2018, the Cole Memorandum was rescinded. And so the Department of Justice issued new guidance. Jeff Sessions, who was no stranger that he didn't like cannabis, he rescinded all the previous DOJ's marijuana guidance. Now, he did say that it was up to the prosecutorial discretion of the U.S. attorneys, excuse me, and that the Department of Justice has very finite resources. What's very interesting to note, though, is that he did this without talking to any of the other federal agencies. So he didn't pick up the phone and call up FinCEN. Hey, FinCEN, I'm thinking about rescinding the Cole Memorandum. He did this on his own. And so what really happened with that? Well, some of the bankers that were on the fence on deciding whether or not to bank cannabis, a lot of them said, all right, we're not going to do this. The Cole Memorandum's gone. And so what are we going to do now? But it seemed to actually have an opposite effect. So if you start looking about 6 to 8 months later, so right around August, September of 2018, our phones started actually lighting up, and bankers were actually more comfortable in entering the space. And the reason that they did that is that the world didn't explode, bankers weren't going to jail, and so a lot of things that they thought would happen if the Cole Memorandum was rescinded didn't happen. And being that nothing ill did happen to those bankers, a lot of banks started getting in the space at that time. In February of 2014, FinCEN put out some guidance, and it's the BSA expectations for banking marijuana-related businesses. And this is a guide that how financial institutions could service these marijuana businesses consistent with BMA, BSA, and AML. it was in coordination with the Cole Memorandum. And so they referenced those same 8 priority factors, and they set forth some practices for best practices for due diligence. And then they also set forth a suspicious activity report requirement. And so these banks and credit unions that are providing financial services to these marijuana related businesses now had to file these SARs. And so they have 3 types of SARs that exist. You have a limited SAR, a priority SAR, and a termination SAR. A limited SAR means that you've got a customer that's banking cannabis consistent with the priority factors and also consistent with the state laws. You have a priority SAR, which means that you found that one of your marijuana customers is doing something wrong or in violation of those priority factors or state law, and then a termination SAR. And so if they had to close an account, then they would file that type of SAR. So I have the Cole priority factors here. Most of you are familiar with those, but those are things like preventing the distribution to minors and keeping money away from gangs and cartels. The reason I have these Cole factors here, even though the Cole memo has been rescinded, is because that FinCEN guidance is still in effect. That is still an operative document. And because that document is in place and it references these 8 priority factors, when you're providing services to a marijuana-related business or when you're thinking about payments to these MRBs, all of these factors come into play. So even our bank and credit union partners at Hyper who are in the space, they're still looking at these Cole priority factors and providing those types of services. One thing I'd like to make particular note for the operators that are watching this presentation is on that second point, prevent the marijuana revenue from going to criminals, gangs, and cartels. Those bankers are going to need to vet out everybody. They need to make sure that you're not a gang member or not a cartel member. And so just be aware that your bankers may be asking for information of your shareholders or board members. That way they can ensure and check that box that money is not going to those types of individuals. So let's talk about industrial hemp and CBD. And so in 2018, we had the Farm Bill. And so now hemp is no longer a part of marijuana as long as it contains no more than 0.3% dry weight of THC. And so hemp is still regulated. It's now regulated by the Department of Agriculture. You also have various states that are implementing their own plans for approval. But one thing that's important to note is that it can actually be more confusing to a banker than cannabis banking. So cannabis banking is very black and white. Hemp can be a little bit gray, and we'll talk about that in more detail. And so here are some of the problems that you encounter with providing financial services to hemp. And the biggest thing is ensuring that it has no more than 0.3 THC. And so there were some studies done to where they took 3 genetic clones of a hemp plant and they planted it in 3 different parts of a state. And in one part of the state, it was exactly at the 0.3% THC. Another part of the state, it was less than 0.3. And then in another part of the state, it was actually greater than 0.3. And so it's not like you can buy a seed. And if you buy the seed, that it's guaranteed no matter what you do, that it's always going to be compliant with that law. And so it's a plant, it's subject to different environmental factors, sunlight, rain, humidity. And so, being that it makes it challenging to the bankers when they're bringing on a hemp client that they know that it is at that 0.3 THC. Also, the product can be transformed through processing. You have a lot of issues now with like on the CBD side where there are certain claims that are being made. So now the FDA is having to step in. You have truth and labeling issues. There have been studies on CBD to where the information that was on the bottle or that content on the bottle wasn't exactly what it is. But really in my head, the hardest thing with banking hemp and CBD, even though it's federally legal, is that it's too easy for it to become marijuana. On just one note, in 2019, there were 100 million hemp plants that were seized and destroyed in California. And so I'm not sure if it was cannabis that was pretending to be hemp or hemp pretending to be cannabis, but at the end of the day, it was a hemp farm with cannabis plants. So let's talk about some of the banking data. And so FinCEN releases information based on those suspicious activity reports that are being filed. And in March of 2020, you had 710 institutions reporting those marijuana SARs. Let's compare that going back a year before to 2019, and there were 636. November of 2019 was the highest that were reported at 747. And then in 2020 of March, 203 institutions were also reporting hemp, and then 61 institutions were reporting hemp only. So when you look at these numbers and you say, wow, we've got over 700 institutions that are filing these SARs, that there shouldn't be a problem with this. Well, those numbers can be a little bit deceiving and they can be a little bit skewed. And so FinCEN is getting this information strictly on the SARs that are being filed. It doesn't say, all right, well, this was one of your big box banks that found a cannabis customer and de-risked them and filed a termination SAR. When we look at the overall banking situation in the United States, there are probably between 50 and 60 institutions that are actively and proactively going out and making this a big part of their business. And so of that 710, less than 10% of those are actively trying to get as many customers as possible. Another issue is that an institution cannot have an unlimited number of cannabis customers. They're going to have internal policies and procedures that will limit what they can onboard. So let's talk about the Safe Banking Act. We've all heard about it. It's in the news all the time. And basically that Safe Banking Act says that a banking regulator or federal regulator is not going to come after a bank or credit union simply for banking cannabis. They're not going to go and take away their deposit insurance or penalize them or hurt them on the lending side. But to me, one of the most important parts of the SAFE Act is that within 180 days, the FFIEC, which is an organization that develops rules and guidance for banks and credit unions, they were to develop a uniform set of guidance for examinations of these cannabis businesses. When you're looking at all of the federal documents that are specific to marijuana, there's really only one document that still remains, and that's that FinCEN guidance from 2014. So in the last 6 years, we only have one document that is still in effect from a federal banking side as it pertains to cannabis. So a lot of people think that the SAFE Act is going to be the silver bullet, and that if we can get that SAFE Act passed, everything's going to be great, and everyone's going to have a checking account, and everyone's going to have financial services and credit cards and things of that nature. And that's not necessarily the case. And so the Safe Banking Act is a great start, all right, but there are a lot of things that are not in that Safe Banking Act that there are still going to be questions that remain. And then also you're going to have situations where not all banks will bank every product. Some banks give car loans, some don't. Some banks give mortgage loans, and some don't. And so you're going to still be in a situation where you have some institutions that decide not to bank cannabis, and some will. I think it is a big step. And so some of the bankers that have said, well, until I get more of a safe harbor in banking the space, I'm going to stay out of it. But it's still going to be an issue. So let's talk about some other legal and regulatory activity. And so in June of this year, FinCEN released some hemp guidance. And basically the hemp guidance basically said that SARs aren't required for legal activity. And then it set forth some due diligence standards. And so it just added a little clarity to the situation. California, you've got AB 1525, which provides a safe harbor type of provision. But when you start looking at the broad spectrum of all of the bills in various states and in Congress, there are over 1,449 of these cannabis bills that are out in the United States. And so with that many, I generally don't get real excited about a bill. I'm more, concerned about what gets passed. And so as these bills are coming, to the legislatures, when they get passed, those are the things that get excited about. One thing to note with COVID, as you've seen, we've been trying to get cannabis banking into some of these COVID bills. And so that's in play right now as well. So let's start talking about payments. And generally, you're looking at three general types of payments. You have open loop, closed loop, and then something what I call semi-open or semi-closed. An open loop payment system is going to be something like MasterCard, Visa, American Express, Discover. It's where a consumer has a card and they can go out to numerous different types of merchants and make a purchase, at that business. Then you have your closed loop transactions. A closed loop transaction is something that can be used only at a specific location. So if I got a gift card for, let's say, Subway sandwich, well, that gift card could only be used at Subway sandwich. It couldn't be used at another sandwich shop. So that's a closed loop environment. And then what we have, what I call semi-open or semi-closed, and those are products that have dual functions. Maybe they ride on both an open loop rail and a closed loop rail. Now, one thing to note is that these semi-open types of situations are often used to circumvent regulations. And so sometimes you'll use a credit card or a debit card to load a stored value product, and then that stored value product in a closed loop environment is able to conduct a transaction at a cannabis dispensary or other type of cannabis purchase. So let's talk about the common rails. And so you've got debit cards, credit cards, you got your branded networks. And one thing to note is that MasterCard, Visa, Discover, American Express, they have all prohibited cannabis transactions, both debit and credit, on their rails. Now, someone say, hey, Andre, I got a solution. I know a bank that is doing credit card transactions for cannabis. And my comment there is that those are prohibited transactions, and those branded networks have prohibited their members from conducting those types of transactions. All right, now that doesn't mean that there is a bank somewhere in the United States that is willing to take the risk. They are willing to take the risk with that specific network. Now, what could happen to them? Well, they could lose their membership. And so that would be the downside. So if there are institutions out there in the US that are processing those types of credit card and debit card transactions on these branded networks, they are at risk in losing their membership. Other common rails, you have the Federal Reserve Bank, and then the Federal Reserve Bank is more looking at those traditional banking products. And so think about the things that you would see at your local bank and credit union. And then those are the types of products that will flow through that rail. And then you have alternative rails, and I put digital currencies, into this category. So let's talk about that for a moment. As far as like blockchain, I love blockchain. I think it's a great technology. I think that the future of banking, I think the future of payments one day, will be in that environment. But you do have some problems there. And so the problems with digital currencies are the following. One is that a lot of bankers just don't understand it. If you ask the average banker to talk about blockchain or talk about these digital currencies, they'll say, I just don't know much about it. There are not many institutions in the United States that will bank blockchain customers. And so it's not easy for a blockchain business to establish a banking relationship, here in the US. And the way the technology works is that it's a distributed ledger type of technology, which is really good. And so there is a certain amount of transparency, because you can say, all right, this payment went from this location to this location to this location. And so you do have some transparency on the movement of these monies. But the problem comes in with knowing where those funds came from. And so when you're a banker, you're looking at money in, and then you're also looking at money out. So when I've got a customer that is in that space, and I banked digital currencies. Actually, I banked digital currencies before they were even called digital currencies. And so it was pretty easy for me to vet out my customer. So I could run all of my customer information program, all of your know your customer. So I could vet out my customer extremely well. And so I knew who I was dealing with, but it was very difficult in finding out who I was dealing with on the other side of the equation. And so if I was bringing in money into an account and turning it into a digital currency, I really didn't have any control over where those funds went out anywhere in the world. And then another problem is, where did the money come from? And so if I have a certain amount of digital currencies in my digital wallet, where did I get those funds? Did I buy them myself? Did I go cash to an exchange center? Did I use a credit card? Or did those monies come from something illicit? Did it come from a cartel or gang activity? And so that's what makes digital currencies a little bit harder, to use. And it's just, one, hard for bankers to understand it, and two, it's easy to vet out your customer, but not vet out everything else and all those other individuals. And then thirdly, and another point to add into this is that these digital currencies are international. And so they can be used anywhere in the world by pretty much anyone in the world. And then that adds an extra layer of risk into those types of transactions. So let's now talk about mobile payments. And when you look at mobile payments, everyone thinks about their phones. All right. So what kind of phones are out there? So you've got your iPhones, you got your Android phones. And when you start looking at the rules for Apple in the Apple App Store, they don't want anything that encourages tobacco, vape, illegal drugs. So all of those types of things are prohibited from their App Store. They also spell it out. So they actually state in there that if you are facilitating the sale of marijuana, tobacco, or controlled substances, unless you're a licensed pharmacy, that it isn't allowed. So that makes things really difficult for companies that are putting a full wallet and a full digital wallet on those Apple devices. When you look at the Google Play Store, they're more of just a general type of comment about illegal activity. And they say, all right, we prohibit apps that facilitate or promote legal activity. And then one other thing to consider when you're talking about these types of platforms is that personally identifiable information is also a concern. And both Apple and Google, they have restrictions on what can you collect or how do you collect it? What kind of data are you using? And then if you're getting that data, what type of security are you putting around it? So you have one aspect, you have all of your typical privacy and security concerns. Then on the other hand, you have, all right, well, they don't want any illegal activity, driving on your rails. When we were talking about credit cards and MasterCard, Visa, Amex, Discover, is that going to change greatly if the SAFE Act is passed? And that's a common question that I get. If SAFE Act passes, will credit cards all of a sudden be turned on? And the answer is maybe not, and actually probably not. The correspondence and communication that I've had with those networks is that they've indicated that they are waiting until cannabis is federally legal before allowing the members, and members being the banks and credit unions, to conduct transactions on those rails. And so that's still a concern, even if the SAFE Act passes, in that. So let's talk about hemp payments. And so hemp, as we know, if it conforms to the Farm Act, it's completely federally legal. There are various state laws. And so of course, those hemp companies would need to be in compliance with their state laws. There's a lot of pent-up demand. There's a lot of pent-up volume. And so, can you go down to your local grocery store and buy CBD products? Yes. But the problem is that a lot of these companies that are just CBD companies, or just this industrial hemp business sector, they still have trouble obtaining banking. They still have trouble obtaining processing. There was a case where there's a very large credit card processor that entered into the hemp CBD space. And so they entered into it and they were there just a few months and then they got out of it. And so they realized that the compliance burden and the ability to check all of those things that they should be doing on this product was too burdensome. And they weren't able to control that in a manner, especially when they were dealing with numerous sales agents across the United States. And so they closed that program out. So if you're a bank or a credit union and you want to process, or you are processing these CBD hemp payments, It's extremely labor intensive. And so you have what we call an enhanced due diligence process. So like the things that you would normally fill out for payments, like a typical credit card merchant application for a federally legal retail store, is one page, very simple. Something that you're looking at for processing for like hemp now starts becoming very complicated. Now you're talking about what are my THC product, what are my lab results? Is this in compliance, with that Farm Act? You have all of the ongoing due diligence. And so just because a product that you're selling today is in compliance, with that act, well, what about 6 months from now? Or what about a year from now? Or what if they start introducing new products? Well, now those banks have to be thinking about, wow, are these new products in compliance, with the law, with both state and federal law? And so that makes it really tough for them. And a lot of the banking systems, a lot of those legacy, those old banking technologies, they just weren't designed for this. They weren't designed to be able to handle all of the nuances necessary, for this. And so with hemp payments, it is not a one and done. So it is not where, you have a salesperson, they find a hemp CBD company that needs credit card processing and that they simply turn it on and then they just let it roll. It's not. It's so much more complicated than that. And so it can be tough for hemp businesses to obtain both banking and credit and debit card processing, even though it is completely federally legal. So now let's start talking about cannabis payments. Now, between cannabis and hemp, cannabis is very black and white. Right? Hemp is pretty gray, but on cannabis, it's very black and white. And one thing that we've always said at Hyper is that it's not a payments problem, it's a banking problem. And for a long-term sustainable solution for payments, it all boils down to compliant banking. And so there are a lot of companies today, and they approach this as being a payment issue. And quite frankly, payments are easy. Just the payment process is very simple. It's been around a long time. We have lots of new fintech companies and lots of new technologies that are available for payments. But the hard part is the compliance. All right? If you're a bank or a credit union and you want to start banking cannabis, you've got policies, you've got procedures, you've got to bring in your board of directors, you've got board approval, you have transparency with your banking examiners. And so for a bank to bring up a payment system or a banking program for cannabis, you're looking at a period of sometimes 6 months to a year. There's a lot to go through. There are a lot of hoops to go through. The examination process for them, is very challenging and difficult. When those banks and credit unions, when they have their examiners come in their doors and they say, all right, show me what you're doing. And they say, all right, we're banking cannabis, or we have a cannabis banking or payment system. Their due diligence and that institutional risk does increase. Now, at least now, bankers are becoming more comfortable in banking cannabis. Federal banking regulators are also becoming more experienced in examining the space. If we were having this presentation 4 years ago, my conversations with the bankers would probably be mainly on why they're not going to jail. And so why do I don't look good in stripes? Why should I bank this space? Why should I give payments to the cannabis space? Most of the questions today when the bankers are, how do I do this in a safe and sound manner? And if we were having this discussion 4 years ago, the examination process on the West Coast could be completely different than the examination process, on the East Coast. So there was not any consistency, in the banking and that banking examination process. My next bullet point here is there are no double secret special deals, and a callback to Animal House. So some people will come in and say, all right, I've got this secret special deal with Visa and they're letting me process cannabis. All right, well, there are no double secret special deals. And so that's just not the case. You either have banks that are are complying with the rules of the credit card companies and they're complying with those prohibitions, or they're rolling the dice and taking a risk. So what's the solution? The solution is transparency, transparency, transparency. Given that cannabis is federally illegal, the highest bar you can set is to where everyone knows what's going on, where the fintech companies are transparent, where the processors are transparent, where the banks and credit unions are knowing and transparent with that banking relationship, and that they're transparent with their federal banking regulators. So let's talk about payment problems. And I make a habit of not calling out names. And so I don't want to mention a lot of different company names out there that have had ill things happen to them. But I want to just point out some things here. And so the first item is pretty important. And so you may say, all right, well, I'm okay if I put that I'm a flower shop or I'm a consulting company on my credit card application. That's not a big deal, right? Well, it actually can be. And so if you are lying to a federally insured institution, that carries a penalty up to 30 years in federal prison and a fine up to $1 million for each charge. And so before you start signing a merchant application to where the sales guy says, oh, just leave your business type blank, I'll fill that in for you. All right, so think twice about that. And also it can be a situation to where you can, if you harm a financial institution outside of the potential penalties, it will prevent you from getting a merchant account at which time that cards open up. Whether that's the SAFE Act or federal legality, then you still want to be able to get card processing in a transparent and a permissible manner at that time. With those card branded networks, with your MasterCards and Visas, it's basically whack-a-mole. And so when they find someone that's taking cards for cannabis, they'll go and they'll squash it, they'll close those accounts, and then something else will pop up. And so quite frankly, it's just a matter of resources for them. But when they identify these cannabis transactions, they do go in and they close them out. And then what I'm going to call a section, payment solution provider carnage. And so the internet, it's just littered with investor lawsuits against payment companies, or they've gone out of business. Or even worse, these operators are losing money. So there was an Arizona, Nevada dispensary that was owed $1.5 million, another dispensary that was owed over $900,000. And then there are a lot of merchants and operators, cannabis operators, that have lost money in overseas processing. And you'll have situations to where you have all of these cannabis transactions, and then that overseas institution says, oh, I didn't know you were banking cannabis. I'm just gonna hold these monies. I'm just gonna take these monies because you were doing something that you weren't supposed to be doing. Something very interesting that was earlier this year is that there were some IT professionals. So there were some tech guys, and they were actually indicted for arranging a credit card payment solution for cannabis. And they had arranged for a solution where the transactions appeared as like dog toys, carbonated drinks and diving gear. And so the transactions were not characterized for exactly what they were. And then you've seen some unfair competitive lawsuits, a very large one up in the Bay Area. And so one operator was sued by another operator saying that you're taking cards that are prohibited. And so that's unfair competition. So I'm complying with the law, you're not, it's unfair, I'm suing you. And then all of that created just this avalanche of other lawsuits, and processors were brought into it, and very, very big name, banking companies and banking technology companies were pulled into it as well. And then you also see payment providers that have been placed in receivership. So what are common workarounds? All right, well, common workarounds to the cannabis payment solution is offshore banks and processing, non-transparent card solutions, ATM machines, reverse ATM machines, script machines, cryptocurrencies. I've even seen things that utilize gold and precious metals for trying to move cannabis monies around. You can also put stored value in there to a certain extent, as well. And so I want to end with pitfalls to avoid. And the purpose of this is not to, to call out names and not to say, all right, well, this company is doing it right, or this company is doing it wrong, or here are the pros and cons. But if you're an operator, these are the things that you need to be looking out for. All right. And so the first one is lack of transparency. So in some way, are they trying to hide what they're doing? Does it feel like they're trying to cut corners? Is this a company that just popped up overnight that's trying to jump into the green business? Another area is lack of audit. We were talking about security earlier in this presentation, and data security, transaction security, the security of personal information, all of those are of concern. And so see if these companies have been audited and make sure that they're safe. Third-party payment processors, they add an extra layer of risk. And so if those monies are flowing through those third-party payment processors, that's something to be concerned about. Compliance deficiencies, indirect relationships. So if you're not working directly with a bank or a credit union, that can bring in an extra layer of risk. Shell companies, that's a big one, all right? So if someone is using shell companies or multiple shell companies to try to move money around or mask funds, that's a pretty big red flag. Hiding the true nature of the transaction, funds residing in a third party's account, you always want to know where your money is, all right? And so if the money is sitting in some account offshore, you want to know that, and you also want to know if your money is safe. Lack of redundancy. So there are some payment solutions out there that may have one bank sponsor or some small bank or credit union in Wyoming. And so you have to be careful about that. So what is the redundancy of that? Is it sustainable? Like at Hyper, we have dozens of institutions in our banking network. And so if one bank happens to get out of it, well, we've got another credit union for that. So think about redundancy. And then lastly, think about your customer. Think about the consumer. And what does it cost them to do business with you? With ATM machines, they'll often have an ATM fee. They'll also have an ATM charge from their bank. And so now they might end up paying $5, $6, $7, $8, for an ATM transaction at your dispensary to buy products. So think about how does it look like and what's the experience, for your customer. And so if you start looking at these types of items and asking these kinds of questions when you're finding a payment provider or payment solution for cannabis, it'll save you a lot of heartache. It'll help save lost money and lawsuits in the long run. And so with that being said, I think that we've finished this presentation. There's a lot of content. I've tried to cover a lot in 30 minutes. It can be a very complicated subject. There are always a lot of questions regarding payments on that. And so I'm going to stop sharing my screen and then we'll open things up for questions. Okay, do we have any questions at this time? Okay, so I see one question here, and it says, from a banking perspective, will federal legality completely open up financial services to the cannabis space? And so when you're talking to bankers, I'm going to say it's not going to completely open it up, but what you're going to see at that stage is that you'll see more of your big box banks getting into the space. If you're a big box bank, and don't want to name any names, but if you're a large institution and you're looking at cannabis to your entire book of revenue for that institution, cannabis can be a very small portion. Actually, it's probably like a rounding error to them. And that's why those larger institutions are generally waiting, because it's just not worth the risk to them. So the short answer is it will open up financial services to the cannabis space. It's going to open up things like on the credit card level. But as far as, will everybody be guaranteed an account? Will every bank and credit union start opening cannabis accounts? The answer is going to be no, simply because there's still a lot of work, even on federally legal products. I'll use money services businesses as an example. MSBs are completely federally legal. Those are like check cashers and money transmitters, but they have very much difficulty in obtaining bank accounts, for those types of services. Okay, let's see here. And there's another question as far as like mobile driver's license and the ability to validate digital identity, and how will this capability be integrated into the ecosystem? And so the short answer is anything that helps identify a person, anything that shows who they are, is definitely a plus. So I think that anytime that we have new technologies that assist bankers and assist operators in compliance with their states, that's something that's very much a plus. I think that going forward, the ability to identify individuals, when they're not face to face, is something that is very something that is very, very good. Another question that we have: will the SAFE Act allow the use of debit and credit cards? And my short answer is maybe, probably not, but maybe. And so MasterCard and Visa has stated that they want to wait till things are federally legal. Could that change? Yes. Could they go, if the SAFE Act passes, could they go and state, well, we'll leave this up to the discretion of our members? They could do that as well, but it will not guarantee, so when SAFE Act, if and when it passes, it will not guarantee credit cards for cannabis. All right, so I got a question on legacy cash. And so that must be a banker. And so legacy cash is cash that was obtained prior to opening up a checking account or depository relationship with a bank or credit union. And I do a lot of consulting with banks. I spend a lot of time with federal banking regulators. And this is a very common question. It's a very big question. And so I'm a conservative banker at nature. And so I like staying out of trouble, with the federal banking regulators. And so when someone asks me about legacy cash, I'll say, well, one is it's going to depend on the risk tolerance of you and your institution. Generally speaking, I do not recommend taking legacy cash because I simply think that that is difficult to vet out. So how do you know where that money came from? How do you know that it was specifically tied to state legal cannabis transactions? Something that you also need to think about are legacy deposits. So a legacy deposit, it's subtly different than legacy cash. A legacy deposit would be, say, like a cashier's check coming from a bank or credit union. And now a legacy deposit, you might think, well, it's coming from another bank, so it's fine, right? Well, but maybe not, because maybe that cashier's check from the other bank was because they were banking that customer and they did something wrong and they terminated their relationship. They kicked them out of the bank and gave them a cashier's check. So there is amount of due diligence that you should conduct on both legacy cash and legacy deposits. If you're a chief compliance officer, the easiest thing to say is we just don't take legacy cash, and then we'll look at legacy deposits on a case-by-case basis. And let's see, I'm looking at one other question, and it says, where does one start in the process as an operator? So as a cannabis CBD merchant, grower, processor, ISO, or ISV. So it depends on where you are. So I'm not sure if this individual is an operator that is looking for a solution, or is a fintech company, trying to provide solutions. But, as an operator, go out and look and research, talk with other operators on solutions that they're using. I'm very partial to Hyper, of course, where I work, because we've spent a lot of time and money in not cutting corners and doing things correctly, with our bank and credit union partners. But do your research out there before you go and select, who you're going to use for electronic payments. And any other questions? All right, so I have a question here. Will banks take deposits from states that allow recreational medical cannabis prior to federal law allowing? All right, so let's talk about that because that question comes up a lot as well. So when you look at the banking regulations, there is nothing that states that a bank cannot take deposits from multiple states. So generally speaking, you have four federal examiners. You've got credit unions that are NCUA. You've got state chartered banks that are typically FDIC. You have your national charters with like the Federal Reserve Bank and then the OCC. So if you have a national charter, can you go and bank in multiple states? Well, the answer is yes. All right. Now, when you start looking at individual states and you start looking at the FinCEN guidance as well as those core priorities, you start talking about the movement of product from one state to another. It doesn't necessarily talk about the movement of money. Now, if I'm a banker, if I'm a conservative banker, I'm going to say, all right, I'm only going to take deposits from where I have a physical presence. So if I'm located in California, I'm only going to take deposits from California. If you're willing to take a higher risk, then you might say, okay, all right, I'll take California and Nevada if I have a national charter. And so you could take that risk and go into that next step. Now you have to beware and you have to start thinking about, what about the cash? And so would I personally want to be moving cash across state lines for cannabis? The answer is no. I definitely would not want to be doing that. But if you're in a situation where, all right, perhaps I'm just going to have armored cars pick up the money, I'll deposit that cash in the Federal Reserve of that state, that will lower that risk. But at the end of the day, this depends on your risk tolerance and on, are you willing to bank multiple states, whether you do or do not have a presence in those states. And any other questions? All right, well, great. Well, thank you everyone for attending. I appreciate it. If you have any additional questions, reach out to me. So you can reach out to my email address or on LinkedIn. And so I'm always happy to have compliance discussions, especially where it pertains to cannabis and hemp banking.